I talk about moving averages all the time. Why is it important for a stock like Apple when you deal with these big levels?
Well, obviously, it just shows a long trend that's been in place for a long time of rising trend for Apple that is now in question. A lot of time, those levels can be actually a support level where people say, okay, this drop has gotten out of hand and let's go in and buy. And that kind of looks like it might have happened on Friday. It sort of touched the 200-day and then came back. But obviously, today, it's a different story, and it's now below the 200-day. So you have to wonder, well, is it a resistance level now? Is it going to be hard for the stock to climb back above that? You know, that said, that's sort of the technician's take on it. A lot of people, don't even believe in things that much, these moving averages that strongly, and believe it's ultimately the fundamentals that are driving Apple.
Yeah, usually I'm in that camp. I mean, it's been 471 days since Apple went below the 200-day moving average, and the last period of time, after the last period of time when it went under it, it then went above it for 471 days. In other words, after it went below it in September of 2013, we saw a pretty long rally in Apple shares until around February of this year. So from February to now, we're down now more than 10%, which would fit the technical definition of a correction. So does the fact that it went below yes, I talk about it like everybody else does, but does the mere fact that it's gone below it give us any sign about what it's going to do next? Right. I think you have to look at the full picture rather than that thing in isolation.
But nevertheless, I mean, it is 4% of the S&P. It is 13% of the NASDAQ. I mean, it does have power to move the indices lower. So this, in theory, could be very significant for the broader market when you do have only a handful of stocks that are moving anything. Oh,
absolutely. And, one thing to look at with Apple is obviously everyone's talking about the China story. And there is a positive.
Is it the China story?
I think that to some degree it is. There's I ran the correlation on the correlation between Apple and the Shanghai Composite Index, and it's not a super strong one-to-one correlation, but it has been going up and rising in the last few months. It's about 0.26 now for a 120-day correlation. So, that's noticeable. That means there is some sort of connection there. Obviously, the Apple Watch is turning out to be probably a disappointment. I read another review today, I think it was in Business Insider, someone saying, great product, I just don't know why anyone needs one. So it's sort of those two fundamental issues, I think, are probably more important than the technicals right now.
And speaking of technicals, though, I mean, I tend to look at the breadth of the market. I like to just check that out to see what's really moving it. And it does seem that 40% of all New York Stock Exchange traded stocks are above their 200-day moving average. That's better than, say, a few weeks ago, but that's not 50%. And that would imply to me that the sentiment might be still bearish versus a bullish.
Well, I mean, the other thing you have to think about right now is we're going to August, which tends to be this sort of muddle along period of the market. So right now, I don't know how much, if we can use those indicators as much as you normally would, because you're looking at a lower volume market, because you're going into, right now we still have some earnings coming out, but we're going to go into a period of less news driving the market.